Hello and welcome to another accounting tutorial where in this session we'll be running through the Advanced Synoptic exam. So for this exam you have 80 marks on offer, and with a pass rate set at 70% you'll need 56 marks in order to pass. There are 6 tasks in total with 2.5 hours to complete them. We'll be running through each task individually. We'll talk about the number of marks for each task and what topic each task's on. If you've got any questions, please do leave them in the comments below. And if you like the video, drop it a thumbs up and subscribe to the channel where I will be creating more videos on AAT topics. Thank you for watching and let's get into task 1. Task 1 then is worth 15 marks and assesses the understanding of the relevance and use of the ethical code, how to act ethically in a given situation, and reporting unprofessional behaviour. This is a computer-based marked task, which basically means it's automatically marked, and you just need to select the correct answer from the drop-downs. So effectively, this task is all about ethics. So with that in mind, let's jump into part A. An accountant, Wajid, has recently started work at Hook Limited, a large organisation with many employees. He's trying to apply the ethical code's conceptual framework to an ethical problem he's facing at work. He's currently evaluating threats to his fundamental principles. Part A then, complete the following statement. To resolve the matter, the conceptual framework states that Wajid must use, and then we have some options. So we have 3 on offer. Well, the conceptual framework is all about using your professional judgment. For the most part, it is an ethical issue, which means that it's not necessarily against the law, but it is about you using your professional judgment in order to make the best decision based upon the information available to you. So for this one, it would be his professional judgment. Right, on to the next one then. So Sherry is an accountant who works for Hook Limited. Georgie is a new trainee accountant with Hook Limited. Sherry tells Georgie that sometimes there is a conflict to be resolved between an individual's personal values and the behaviour of their employer. Sherry personally values loyalty and fairness highly. B then says, identify whether there is a conflict to be resolved between the behaviour of Hook Limited's management and Sherry's personal values. So we've been given 2 examples of behaviour by Hook Limited's management. We've got Sherry's personal value, and then it asks, is there a conflict to resolve? So the first one then states long-standing employees are allowed an extra half-day's holiday for every 2 years of permanent employment with Hook Limited. So Sherry's personal value here is loyalty. So for this, is there a conflict to resolve? There absolutely isn't. So it's quite common in a person's employment contract that the longer they have worked somewhere, they actually get an increase in annual leave days. That would also tie into Sherry's personal value of loyalty. So would there be a conflict to resolve? Absolutely not. The next one then, employees are promoted on the basis of family or other close relationships. And Sherry's personal value here is fairness. Well, I think that is fairly clear that if a person is promoted based upon their family or other relationships with people, that wouldn't really be completely fair. Usually we would expect somebody to be promoted based on their work ethic or ability rather than being a family member, in which case that would be a possible conflict. So we'd select yes. Nothing too complicated so far. Let's move on to part C. A potential customer of Hook Limited has asked Sherry to reveal confidential information about Hook Limited's cost structure and pricing strategy. The potential customer has offered to pay Sherry for this information. C says, identify whether the following statements are true or false. Cherie may never disclose confidential information to any third party. Well, that would be actually false. So although usually you wouldn't be able to disclose any confidential information, it wouldn't be a case where that's never the case. There are a couple of options, that being that if she gets permission from that particular third party, or when there's a legal right to do so. So if they're being investigated for something such as fraud, money laundering, etc., then you would have the right to disclose confidential information. So that would be false. Number 2 then, the threat that Cherie is facing to her compliance with the fundamental principles is a self-interest threat. Well, that one would be true. The reason being, it states in the question, the potential customer has offered to pay Cherie for this information. Well, obviously, with her being offered money, that's a good thing for her, and therefore she would be facing a self-interest threat. So that would be true. The last one then, Cherie must resign immediately from Hook Limited as her integrity has been compromised by the offer from the potential customer. That would be false. That would be quite an extreme action to take immediately. What she would be better doing is disclosing probably to their manager that this has happened, that this has taken place, and hopefully that would then be noted down and dealt with from the senior management. There wouldn't be the need to resign immediately. Right then, moving on to part D. Ian is also an accountant with Hook Limited. The manager of one of Hook Limited's main suppliers has offered Ian gifts. Ian has known the manager for several years. D. Complete the following statement. Being offered gifts by the manager is either an intimidation threat or a familiarity threat. Now, in this scenario, the way that I would take this is because it states that Ian has known the manager for several years, it would be a familiarity threat. There's nothing within this question where it states any sort of intimidation or sort of threat, in which case I would, out of the two, pick the familiarity threat. To Ian's fundamental principle of, and then we've got to choose between objectivity and professional competence and due care. Well, usually when we have a familiarity threat and someone is offering a gift, the threat is to somebody's objectivity. And the reason for that is purely because when we are acting as an accountant, we need to make sure that we're not showing any bias. And by someone giving us gifts, it may appear, even if it's not, to cross that line between professional and friendship relationship. So the correct option here would be objectivity. Following on then for part E, Ian is following the conflict resolution process in the ethical code in respect of an ethical dilemma at work. Ian has collected evidence and documented the process carefully so he can seek guidance on the dilemma from his friend, an accountant who works for another organisation. E then, complete the following statement. In relation to the evidence and documentation, Ian must be particularly careful to ensure the fundamental principle of, and then we need to select either confidentiality, professional competence and due care, or professional behaviour. Now the key issue we have here is that Anton works for another organisation. So sharing that information, we need to be particularly careful of confidentiality. As a lot of the information that we would be dealing with here would be confidential information, we need to ensure that we don't cross that line and share information that we've not been given the go-ahead in order to be able to share it. So it would be confidentiality. The next one then. Ellie is an accountant who works for a professional accountancy firm. She has a client who has been involved in concealing criminal property. Ellie has reported the client to the relevant authority and has told the client about this. Part F then, complete the following statement. Ellie has committed the criminal offence of, and then we have three options. We have money laundering, failure to disclose, or tipping off. Well, if she has reported this as a criminal offence and then actually let that client know about it, that would be classed as what's called tipping off. So what you're doing there is effectively informing the person who is at fault that you have reported them. And obviously at that point, they might do something to try and cover up what they've been doing wrong, or it could be such as destroying evidence or informing other people who are involved what they need to do. So that would be classed as tipping off. Right then, the last one on this question. Luke is an accountant in practice, working as a sole practitioner. He has discovered that a client has been money laundering. Part G. Complete the following statement. Luke should disclose confidential information on this matter directly to, and then we need to choose between the money laundering reporting officer, the National Crime Agency, and HMRC. Now, if he is a sole practitioner, he wouldn't have a money laundering reporting officer, so it wouldn't be him or her. It would also not be HMRC either. They wouldn't deal with that directly. So therefore, it would be the National Crime Agency. So what he would have to do is basically fill out a report, send that into the National Crime Agency, and they would then pick that up. And eventually it may be that HMRC does get involved. However, initially the report would go to the National Crime Agency. And that covers off task 1 then. So nothing too complicated in there. You can see that it's all multiple choice. So with that in mind, let's jump into task 2. Task 2 then, which is worth 12 marks and assesses the accounting knowledge of how to prepare accounting records and respond to errors, omissions and other concerns in accordance with accounting and ethical principles and various other regulations. This is a computer mark task, which just means you'll need to input figures or pick from drop downs in order to complete the task. Right then, let's jump in and have a look at the first question. This task is based on the workplace scenario of New Place, who have a year end of the 31st of December. Today's date is the 15th of January 2000 and we'll go with 18. You are checking the non-current asset register. A van acquired on the 1st of January has been included. You find the related purchase invoice. And here we have the related purchase invoice. You establish that New Place are a VAT registered business and all VAT is correctly posted to the VAT control account. In the ledger accounts, the purchase was entered as, and we have the postings below. A then, complete the sentence below to show the correct treatment of this invoice. The correct value to be included on the non-current asset register for the cost of the van is, so we have a few options on here. We have the van itself, we have a 12-month road fund licence and 36 months servicing. When it comes to capitalising an asset, we can include the cost of the van. However, we wouldn't be able to include the road fund licence because that is renewable, and the servicing is also a yearly cost. It adds no value onto the actual asset. So the amount that could be capitalised would be the 8,000. It's also worth noting that the reason we've not capitalised the VAT on this is because it states that New Place are VAT registered, and with it being a van, a work vehicle, we would be able to claim the VAT back, and therefore we only want to capitalise the net amount. So then the second part of this, it says, and the road fund licence should be posted to, and that would be expenses. So the road fund licence, obviously it's a cost to the business, so it's definitely not income. It's not an asset because it's not worth any value in itself. It doesn't generate any income or save the business any money. And it wouldn't be a liability because for the license itself, we would have to show that as an expense to the business. So it would be expenses. Right then, moving on to part B, you need to adjust for the 36 months service payment. Select the correct adjustment for the service payment for the year end 2018. So, because we have 36 months and that is paid up front, we have a prepayment. And we have a prepayment as 36 months is 3 years. We have 1 year relating to the current year, which is the year ended 2018, but then 2 years which have been prepaid. So what we would do is we would take the 36 month servicing fee of £1,800. We would divide it by 3 to get the yearly amount, and then times it by 2 because we've prepaid 2 years. So that's 1,800 divided by 3 to give you £600 per year, and because we've prepaid 2 years worth, we'd times that by 2, so 600 multiplied by 2 would be a prepayment of £1,200. So let's just enter that in and scroll down. Right then, moving on to part C. The adjustment for the treatment of the invoice for the van has been made. You are recording the annual depreciation charge for the new van. Vehicles are depreciated at 25% per year on a straight line basis. C, part I then. Prepare the journal for the first full year's depreciation on the van based on its correct cost in the ledger accounts. To do this then, we'd first need to calculate our depreciation, which it states in the question is 25% per year on a straight line basis. So the amount that we recorded in our accounts was £8,000 for the vehicle. So to calculate the depreciation, we would do 25% of £8,000, which would be £2,000. And then to post this correctly as a journal, it would want to go to the depreciation charge and the accumulated depreciation. So let's just enter these in. So we need to have depreciation charge and the accumulated depreciation. Now, it would be a debit to the depreciation charge and a credit to the accumulated depreciation. Remember that the depreciation charge is an expense that goes to the profit or loss, and the vehicle accumulated depreciation would do exactly that. It would accumulate over time and offset against the original cost of the asset. It's not something that I'm going to go any further with right now because I have got a full video explaining how to calculate depreciation using various methods, how to post these to your accounts, and I explain that in depth within that video, so I'll link that in the description. And if you forgot this from Advanced Bookkeeping, then I would highly recommend you go back and give that a watch. Right, part I then. Complete the following statement about the overall effect on the business's profit for the year of correcting the vehicle cost and depreciation. So what we need to determine here is whether the profit for the year will have either increased or decreased after the adjustments. Well, the profit for the year will have decreased, so it should be lower after the adjustments. So if you remember, and in fact what we'll do is we'll scroll back up. Originally, they had posted this vehicle at £10,000. So they had included within the cost of the asset the road fund licence and the 36 months servicing. But we've determined that these shouldn't have been capitalised. These should have actually been an expense within the profit or loss. So when we capitalise something, the cost goes to the statement of financial position as an asset. However, what we're saying is we shouldn't have capitalised those amounts. They should have been expenses within the profit or loss. So what's happened is, now that we've corrected those, that extra £2,000 will go as an expense within our profit or loss. Now, if we've increased our expenses, that means the overall effect on our profit is that it's going to be lower, because we know that to get to our profit figure, it would be all our income minus all our expenditure. So by correcting this, we've increased our expenses and therefore lowered our profit. So we can go back down, and like I said, that would be a lower profit as a result of making those adjustments. Fantastic. Right, let's move on to part D then. Whilst reviewing the non-current asset register, you identify another error. An incorrect amount of VAT has been claimed, resulting in £1,100 too much being reclaimed. Despite discussing this with your manager, no action has been taken to change the VAT treatment, either in the accounts or with HMRC. You consider consulting a technical helpline outside of your organisation, which has been set up by your local college to determine what you should do next. D then. Identify which of your fundamental principles would be under threat if you called the helpline. We've got objectivity or confidentiality. Now, out of these two, the most appropriate here where we may have issues is to do with confidentiality. Because this information is about the business, it would be confidential to disclose. Now, although you would be doing the right thing by getting advice on what you should do next after talking to your manager with them disagreeing, there is still a risk to your confidentiality because you're discussing the business's financial information, which is confidential. So you would have to do it in a way in which you were not disclosing any specific figures, but just getting general advice on what you would do within the situation that you were in. So in terms of which of the fundamental principles would be under threat, it would be confidentiality. Part E then. You decide not to consult the technical helpline, so you must now consider your position with regards to the ethical code. Part E then. Identify what further action you need to take to ensure you're compliant with the ethical code in this case. So we've got three options. We've got no further action by me is necessary because it is Mo's responsibility to decide how to proceed. We then have I should inform Mo in writing that my professional principles prevent me from being connected with incorrect information submitted to HMRC. Or part 3, I am obliged to inform HMRC about the error myself. Well, out of these three options, the most appropriate would be option number 2. You see, the problem that we have is we are not allowed to disclose incorrect information to HMRC. However, equally, it wouldn't be your specific responsibility to disclose that information after being told that you aren't allowed to. In which case, the only other option that would make logical sense here would be option number 2. The best thing you could do here would be to inform Mo in writing that your professional principles would affect or would prevent you from being connected with incorrect information submitted to HMRC. So it would be option 2. Right, moving on then. Mo has asked you to extend your review of the non-current asset register. You will need to check all invoices for additions in the last 12-month period. Mo has requested you complete this by the end of the day. It is now 4:30 p.m. and you are due to leave at 5:30 p.m. The review is likely to take at least 3 hours. Having raised this with Mo, he has suggested you get it done quickly. Identify which fundamental principle is at risk in this situation. I think this one is a relatively straightforward one, So this would be your professional competence and due care, particularly around the due care. If you know that this job should take roughly 3 hours, then it would be nigh on impossible for you to be able to do it with due care within 1 hour, which is suggesting that if you start it at 4:30 and you were leaving by 5:30, you've got an hour to do a job that should take 3 hours. So the big risk here by rushing it is that you've not taken that due care and there could be mistakes. Fairly straightforward on that one. Part II then, identify the action you should take. So let's have a look at the options. So we've got explain to Mo you will prioritise the review for tomorrow morning, request help from your colleague who is preparing payroll today, refuse to complete the review of the invoices, or work late to get the full review done outside your working hours. So the best option here would be number 1. So we have individual problems with each of the other options. So it wouldn't really be fair to ask your colleague who's preparing payroll. They've clearly already got a job that again needs to be done accurately. So it wouldn't be any good asking them. 3, refuse to complete the review of the invoices. That is somewhat standoffish, so we wouldn't want to go down that route unless we absolutely had to. And this way, you're at least by picking option number 1, you're still saying you can do it, but giving yourself the appropriate amount of time to be able to do it. And then the other option, so the last option, work late to get the full review done outside your working hours. Again, it's not an ideal situation, and it's not that at times you may not have to work late, but equally it's not something that ideally you would want to get into the habit of doing, because you should be able to do the work that is given to you within working hours. Like I said, it is at times during your career, you will have to work late on occasion to get something done, but it's not something ideally that you would want to make a habit out of. So that would be option number 1. Right then, the last one on task 2 then. Kira Jackson at ADSY & Co. finds out about Mo's attempt to reclaim VAT incorrectly. Kira believes she has reason to suspect that this was part of a money laundering operation at New Place. Part G then. Identify what Kira should do next. And we have 3 different options. We have discuss the matter in full with Mo, make a suspicious activity report to the relevant external authority detailing her suspicions, or make an internal report within ADSY & Co detailing her suspicions. The most appropriate action here would be the bottom one, make an internal report within ADSY & Co detailing her suspicions. So the first option, discussing the matter in full with Mo, could be classed as tipping off, as she believes that Mo was the one who has potentially done something wrong, so therefore wouldn't want to be that one. Option number 2, make a suspicious activity report, an SAR. The only problem with this one is that it says she has reason to suspect that it was part of a money laundering operation. Now, unless there is some sort of definite evidence, making an SAR is possibly a little bit extreme at this stage. So if for whatever reason she did have solid evidence, that would probably be your best option. But as at this point she just has a reason to suspect that it was part of a money laundering operation, the best option would be to make an internal report. So it would be option number 3. And that finishes task 2. So let's now jump into task number 3. So task 3 then, which is worth 13 marks and assesses the knowledge and the understanding of the relationship between financial accounting and management accounting systems of an organisation and how they can be used within decision making. It is a new task, this one, that was added in the update which happened in September 21, and is an open response task which requires you to write your own answers. It is a human marked question, which means it is marked externally by AAT. Right then, let's get into the first part then. So this task is based on the workplace scenario of new place. Today's date is the 31st of January 2018. In December 2016, New Place produced a budget for its sales revenue, costs and profit for the year to the end of the 31st of December 2017. The budget was to sell 20,000 units of office equipment in 2017. Fixed costs were budgeted to be £600,000 and the average sales price per unit was expected to be £170. The average variable cost was expected to be £120. A then, using the information above, calculate the following budgeted figures for the year to the 31st of December 2017. So part I then is to calculate the break-even sales volume, and you will hopefully remember this from management accounts costing. And to calculate the break-even, we do the fixed costs divided by the contribution per unit. So to calculate the contribution per unit, all we do is the sales price per unit minus the variable cost per unit. So that would be £170 minus £120 to give a contribution of £50 per unit. To then calculate the break-even sales volume, we would therefore do the fixed costs of £600,000 divided by the contribution per unit of £50, which would give us a break-even sales volume of 12,000 units. So that is the amount that this business would need to make and sell in order to not make a loss or a profit. The margin of safety then is the difference between the budgeted sales units and the break-even sales volume. So that would therefore be the 20,000 minus the 12,000 break-even to give you margin of safety of 8,000 units. Right then, moving on. Mo Hussein is considering a change to New Place policy for setting the selling price. Part B, calculate the budgeted average selling price if a 30% markup on variable costs would to be applied. So markup, all we do here is add on a percentage of the cost on top of the cost to give us our selling price. So the variable costs in this example are £120. So with a 30% markup, what we're saying is that we're going to add on 30% of our costs to get our selling price. So what we would do is 120 times by 1.3 to add 30% on, which would give us a budgeted selling price of £156. Excellent, so hopefully nothing too complicated in this first section. Let's now move down to the next part. The following are extracts from New Place's trial balance as at the 31st of December. So we can see below that we've got an extract from the trial balance. It then says, depreciation for the year has not yet been calculated. New Place policy is to depreciate on a 20% diminishing balance basis. Part C, using the information from the trial balance, calculate the following actual figures for the year to the 31st of December 2017. So the first we have here is the depreciation expense for the year. So because they're doing this on a diminishing balance basis, we need to apply the 20% to the net book value of the asset. So to do that, you can see that we have the non-current asset at cost account, which has a balance in of 920,000, and we have the accumulated depreciation, which will offset against that at 300,000. So to calculate the depreciation expense for the year, we do 920,000 less the depreciation of 300,000 to give us a net book value of 620,000. We would then multiply that figure by 20% to give us a depreciation value for the year of 124,000. Next then, it wants the non-current asset accumulated depreciation at the 31st of December. So all we would need to do for that is take the current balance on the accumulated depreciation account, which is the 300,000, and add on the depreciation expense that we've just calculated in part I. So it'd be 300,000 plus the 124,000 to give us accumulated depreciation now at 424,000. The next part then, it would like the asset carrying value as at the 31st of December. So all we need to do to calculate this is to take our non-current asset at cost figure, which is the 920,000, and minus off our new accumulated depreciation figure of 424,000, which would give us a new asset carrying value of 496,000. Again, just to reiterate, the assets carrying value is the at cost minus the accumulated depreciation. Right then, the last part on this question then, it says depreciation of non-current assets for the year will be A, and we need to pick between a debit or a credit. Well, depreciation of non-current assets for the year, so not the accumulated, but the actual yearly amount, is the depreciation expense, which means it's a debit. And that covers off part C. Let's now move on to part D. And we can see from this that this is where our written tasks come in. So we'll answer the numerical questions first, and then we'll have a look at how to answer these written questions. So actual sales volume for 2017 was 20,000 units. For the first part then, it says calculate the actual contribution for the year. So to answer this, we'll need to scroll back up and have a look at our trial balance again. So remember, to calculate our contribution, we do our sales less our variable costs. So in this example, it would be the sales revenue of 3.2 million minus our variable costs. And here we have direct materials and direct labour. Therefore, to calculate the contribution, we would do the 3.2 million minus off the direct materials minus the direct labour. And that gives us a contribution of £680,000. We then want to work out the actual fixed costs. So again, scrolling back up, and you'll see that we have the overheads figure. Now, the other important part within this question is that it says calculate the actual fixed costs adjusted for depreciation. So when we did part C, we worked out the depreciation expense for the year. So what we need to do is we need to take our fixed costs, which are our overheads, which are here, this 288,000, and we need to add on our depreciation expense for the year, which is the 124,000. So let's add those two together. So that gives us an actual fixed cost of 412,000. So that takes care of those numerical questions. The next part then is part III, which says calculate the break-even volume based on the actual figures for 2017. You must show your workings. Right then, so let's just remind ourselves that break-even volume is calculated as fixed costs divided by the contribution per unit. So what we want to do is, now that we have our fixed costs, we would do fixed costs of 412,000, and we need to divide that by the contribution per unit. So we've calculated the actual contribution for 20,000 units. So let's just get in here the contribution per unit, which we're going to calculate as our total contribution divided by the number of units. Okay, So if we type that into our calculator now, it would be 412,000 divided by, and then we need to do the 680,000 divided by the 20,000 units. So the actual contribution per unit was £34. So that's 680,000 divided by the 20,000 units. So we're effectively now taking the fixed costs of 412,000 divided by 34, which works out as 12,118 units. It doesn't come out perfectly at that. It actually comes out at 12,117.64 units. We can't have 0.1, 0.2, 0.3 of a unit. So when it comes to units, we would always round up. Excellent. Right. Okay. Moving on to the last part then. It says explain why the actual break-even point for 2017 was different from the budgeted break-even point. And this is worth 2 marks. So the key here then, if it's worth 2 marks, is to get 2 points. So then, why has there been a difference? Well, to start then, the actual break-even volume was 12,118 units, which was higher than 12,000 units. So the first point on there that we want to say is just explain the difference between what the budgeted break-even was and what the actual break-even was. So let's just start this out. The actual break-even was 12,118 units, and the budgeted break-even was 12,000 units. So that's just our starting line. We then need to describe, well, I would describe 2 changes as to why that has happened, because it's worth 2 marks. Now, the first point that I would raise here is to do with contribution, because we originally worked out that the budgeted contribution was £50 per unit, but the actual contribution was £34 per unit. Now, if our actual contribution is lower than what was budgeted, the more units we have to sell in order to break even. So I would add that in at the end. The lower contribution per unit, the more units we have to sell in order to break even, if the fixed costs remain the same as budgeted. So that would cover point 1. The next point I would mention would be around the fixed costs. So the budgeted fixed costs that we had were £600,000. So the budgeted fixed costs were £600,000. The actual fixed costs were £412,000. A decrease of £188,000. The lower the fixed costs, the lower the number of units we need to produce and sell in order to break even. And that explains the difference between our actual break-even point and our budgeted break-even point. That covers off part 1 of this video. In part 2, we'll cover task 4, 5 and 6. But thanks for watching part 1. I hope you found it useful. And if you have, drop the video a like and subscribe to the channel. I'll see you in part 2.